My name is Sean Sheevy, and as mentioned, the mortgage sales manager at Pender Federal Credit Union. I have a real passion about personal finance, and I'm a UWF graduate, 2006. I would say that I'm from Pensacola originally. My dad was in the military. He was in the Army, so we moved around quite a bit. I was born in Germany, and we moved here in the early 90s. So I went to middle school and high school here, and got married in, don't tell my wife, I have to think about this, 2002. So 17 years almost. We have 6 kids. Wow. They're all mine. And 3 boys and 3 girls. I planned it that way. I kind of messed up. I did boy, girl, boy, girl, girl, boy at the end. I mixed up a little bit. But other than the free lunch, why'd you show up today, other than the free lunch? Because I'm not going to talk up here the whole time. I really need some interaction here. Because if you listen to me talk the whole time, it's not going to be any good. Yeah.
Learn more about credit scores and what affects them daily.
Perfect. We're going to talk a little bit about that, certainly. Anybody else have any?
Going to college to get a job so you can make money, but when you're in college, you don't really learn what to do once you start getting that money. So. I
agree with that. Yeah.
Learn how to save for long-term goals.
Okay, cool. We're going to talk about goals too. Well, I took a personal finance class here. I was, a little bit of backstory. I went on a 2-year church mission to Guatemala, so I speak Spanish. And when I came home, I went to 13th and 14th grade over at PJC, it was still then, Pensacola Junior College. Now it's Pensacola State College. And graduated with my associates there. And, the first day I went, I registered for classes, and I thought I was going to do computer science, something like that. And I went and registered, and I took my first math class. And I was sitting down, and the lady's board probably this big, just writing the whole thing. You need to write these formulas down. I started to write it down. I'm like, I don't know about this. I don't know if this is for me. So I immediately got up from that class. I went and changed my major to business. So I got an AA in business. And then when I came over here to UWF, I had some other friends who got a BSBA in finance. And I said, well, I like money. We all like money. Let me think about doing something like that. And I'll tell you, personally, I got into finance just as some of you mentioned, like, how do I manage my money? I wanted to understand finance and look at an opportunity to better myself. And then I really have a passion for it because in my job now and in previous jobs I've had, I've been able to educate people on finance because they don't really get it in high school and sometimes even in college they don't get it. So, what are some resources that are available today to help learn about personal finance that we have available to us? Let me show you one here. We have the internet at our fingertips. So I have a couple teenagers. That's always fun. So if I ask my son, he's 15, he's almost 16, I say, hey, tell me something factual. I'll ask him a question. I can't even think of one right now. Or even if I ask him what the weather is, he's like, I don't know. He can just say, hey Siri, what's the weather for the next 7 days? It'll give it to me. Now if I ask him about, hey, what about that one video where that guy falls down? It's pretty funny. He knows exactly where to get that and how to get it really quick. But we have, I was thinking about that question, like what resources we have available today that we didn't have even 20 or 30 years ago. Has anybody ever listened to a podcast about personal finance? Yeah, a couple. Okay. There's some great information out there. Coming to a seminar like this is a great opportunity. I learned a lot about finance, about credit scores, not only by what I do in my current job, but even prior to that, I would read articles online. I would talk to people. One thing I've learned in my life is that we have a great resource to talk to each other who have more experience, right? Has anybody ever received advice from somebody? I think we've all gotten advice, right? Has anybody ever received bad advice? Yes. When we've gotten good advice, right? So, you got to take advice with a grain of salt, of course, but it's an opportunity to learn from other people and their experience. So using money wisely, I'll tell you, I love to save people money. That's what I really like to do. Whenever, in my role as a sales manager, I also do mortgage loans, and I help the people that report to me and help them help their members get the best bang for their buck and get the lowest rate. And people shop insurance, for example, and so I'll talk to people that have homeowners insurance, which is a bill you have to have when you have a house. We want to make sure that it's all covered if something were to happen. And just recently, my mom is working on buying an investment property, and I said, "Mom, how much do you pay on your homeowners insurance on your house?" And she told me how much. I'm like, really? That's too much. Because based on my experience, I kind of know I see these prices come in all the time, and I know what things should cost for homeowners insurance, even auto insurance. And so I tell my mom, I said, listen, if my bill goes up more than $100 a year, I'm going to shop it. Well, I've already shopped her. I've helped her. I've sent her to a couple people, and they're going to drop her insurance about $1,500 a year. Just like that. And I said, how long have you been paying this, Mom? And she said, I think I've had this policy for about 4 or 5 years. I said, dang it. I said, I wish we would have talked about this sooner. So I wish I could shout from the rooftops about how I have a passion for this and I want to help people. And I get regular referrals from people because when somebody's with me, I try to give them the best service I can and help them out. And that goes for everybody. I think when you have good news, right, you want to share that with people. When you save money, you want to say, hey, I just saved a bunch of money on my car insurance because I went to Geico. I don't know. One thing I do is every 6 months my insurance renews on my vehicle, right? Who here has car insurance, right? So for years, I would pay monthly to my auto insurance. They would just take it out, auto pay it, and take it out. Well, I found out, and I don't know how just came up in a conversation or I read something in my policy. If I paid it in full, I would save 5% or 10%. I can't even remember. I think it's 5%. So if I paid in full. So I said, well, I'll just pay the policy in full, and then I'll pay myself every month. So I set it aside every month as a bill, and then they just draft a little savings account I have set up on the side. So I look for opportunities like that all the time to save money. So I pay my insurance in full, my auto insurance, my homeowner's insurance, and by doing that I can save 5% here, 10% there, and it all adds up. And so I've saved thousands of dollars over the years. Having 6 kids, you've got to do that. So some people ask me, say, what's your wife do? Does your wife work? And I'm saying, I'm not going to tell her you said that, because she doesn't work outside of the home, but she definitely works. It's a hard job, but somebody's got to do it. So when we analyze income, we've got to kind of, I think I have a little bit of an analytical side of things. I really like to look at numbers and see how they work. So when we analyze income, how would you calculate, or who knows the difference between gross income and net income? Yes?
So the gross income is what you make, and then you have different taxes and other things that is getting taken out of your salary, and then your net income is what you take home.
That's right. What you catch in the net. There you go. That's right. So that's right. So now when I qualify people for loans, I do look at the gross income and I look at their debts and I have little ratios I calculate. But for net income, that's really what you take home after insurance and the like. When you work for an employer that offers homeowners, or not homeowners, but health insurance, they'll take money out for that, or dental insurance. So there's other things that will come out for sure. Let's see here. So when we talk about setting goals, you mentioned setting short-term, mid-term, and long-term goals. What would be a good short-term goal? Does anybody have any financial goals for because we're talking about finance. I can talk about some other goals, but
Saving $50 a month for an emergency fund.
Saving $50 a month, that's perfect. Okay. So that's a short-term goal. That's something you say, I want to save, I want to have in my account at the end of the year, I want to have $1,000. You target a number and you say, you've got to analyze your income. You've got to analyze, well, how am I going to save this? If I get paid, if I have a job and I get paid every week or every 2 weeks, how much am I going to set aside to do that, to meet that goal? So $1,000 a year, or if you say, I want to save $1,000 by the end of this year in 12 months, that's $83.33 a month. I think I did the math over here. If you divide it by 52 weeks, so just weekly, $19.23, it's about $20 a week, or $2.75 a day. So how many here spend, how much do you think you spend on a daily basis? Has anybody done any tracking of their spending? Yeah? What kind of apps do you use for tracking it, or do you just look at your accounts?
I have every dollar.
Every dollar?
Every dollar.
Okay.
So as I spend money and pay money, I take it off my every dollar budget.
Perfect. That's good. I like it. You were okay. Sorry, got you with a bite.
I use every dollar as well. So I have a lot of clients that also prefer Mint.
Yeah. Yeah, Mint is. I've used that before, and I think it's a good app. There's many financial institutions, Pender included, have different budget apps and things like that as part of their online banking. So people come to me and they say, I want to buy a house, and sometimes they come and they don't know even where to start, right? Has anybody bought a house here before? Yeah, a couple of us? Okay. Does anybody want to buy a house? Do you want to buy a house one day? Okay, great. All right. So, usually I'll have regular conversations with people about, well, how do I save for a down payment? What's even required for a down payment? What's closing costs? They have all kinds of questions that we talk about. What kind of credit score do I have to have? So, depending on, you have to plan to know where you want to go, right? If you say, well, one day I want to buy a house, but you don't really have any idea about how much money you're going to need, you can't really make a plan to get there, right? So maybe it's talking to a financial advisor, somebody at the bank, to talk to them about how much you really would need, and then you set a targeted goal to get there, is what I would recommend. So that could be a midterm, or it could be a short-term, midterm, or long-term goal, depending on where you want to go. What are some other long-term goals that people consider? Retirement? Yeah. We're going to say that, yeah. So retirement goals, and there's different options for retirement. I'm not a financial advisor, but there's all kinds of investments. That's another reason why I wanted to get a finance degree, because I kind of wanted to understand how that works, how the markets work, and get a better understanding of that. And so even after I've left the university, I've still continued to try to learn things, because things change, right? That's inevitable. So, you've got to, it talks about setbacks. We may say, well, we're going to save this money, and then we have an unexpected expense, right? What are some unexpected expenses that have come up in your life, or that in friend's life, or somebody that you know? What's that? Cars. Yeah, like you got to get a new car. Maybe there's some car repairs issues. Tires. Yeah. I know one of my friends, I don't think they've ever replaced tires. They just buy a new car. I'm just joking. But they do like cars. But I'll tell you, when I've lived, I try to live frugally, try to live within my means, and we'll talk a little bit more about wants and needs in a little bit. But for a number of years, how many was it? I think it was about 10 years, I drove a 95 Saturn that my sister gave me, free. So I was like, well, I did pay her $1 for it. But, so it was a free vehicle, and I rode that thing to and from. It got me from A to B. Wouldn't take it on long trips, but it got me around. So you don't always have to have the newest and best of everything. So we talked about developing a savings plan. We talked about some apps that people use. What happens when you spend more money than you have income? let's say you have a budget and your budget is, I'm going to receive $1,000 this month, but then you look at the numbers and you say, well, I actually spent $1,200 this month. How does that happen? Yeah.
You have debt?
You may have debt, or you may have said, well, I may have to pull from my savings account, exhaust my savings account, or you may be like, well, got $200 now on my credit card that I now have to pay back. Yeah, that's for sure. So what are some things that you can do to increase your income or decrease expenses? What are some things that you've thought about?
Use your friend's Netflix account.
Yes, perfect. Okay, I'm not the Netflix police. I won't tell anybody. Yes. Yep. I still use my mom's Amazon Prime. What? Yeah, that's a good one.
You have another part-time job?
Okay, yeah, part-time job. So my wife, for example, something she's done recently, well, we love kids. We have 6 of them. Well, there was a lady that I used to work with who had a friend who said, hey, my friend needs a caregiver for a couple weeks for their 4-month-old daughter. And so it was a couple weeks, and we said, oh, yeah. She said, Lori, you should do that. And this little baby's so sweet, baby Paisley. And she's very sweet, and it's great. It's almost like being a grandparent because I get to see the baby at the morning. She's all happy. And then at night or in the evening when she comes to get her from work, we don't have to worry about the sleeping or anything like that. It's perfect. But so she started to do this a little bit to get a little bit of extra money. We've made some plans like, well, what are we going to do with this extra money? We don't want to just spend it. Well, maybe we can focus on a couple debts that we can get rid of. So what are some other ways that you can do to increase income?
I would say understand the difference between a need and a want.
Yes, I agree. We are going to talk about that here in just a minute. But we can talk about it right now. What is like I talked about a car, right? So you may or may not really need a car. I mean, depending on what you're doing. Most people in our area need a car because we live so far away. But do we need 2 cars? Like there was a time in my family where I carpooled to work with a friend for about a year. I carpooled with a couple of different friends. I paid them some gas money, and so my wife had to take me, or they would come pick me up, and then we'd go to work. It was kind of, I mean, you don't really hear a lot about that in our area, but if like half the people in Atlanta would carpool, there would be no Atlanta traffic, right? That'd be a great thing. So there are things like wants and needs. So what are some wants that people have?
New clothes.
What's that?
New clothes.
New clothes. Yes, new clothes. Perfect.
Eating out.
Eating out. Yeah, it's real convenient, and kind of. I really want to go to this place and get this fine steak. It's very nice, but we may not need it. We need food, of course.
Makeup?
Makeup. Yes, I know. I feel you. What are some other wants that people have? Electronics, yeah, they got to get the new iPhone or the new Samsung or whatever. Yes, I agree with that. They got to have the best of the best. And people, I think, do you ever feel pressure? Have you ever felt pressure or see people have this pressure where they, I think they're just trying to keep up with somebody else, right? Yeah, they're just trying to, fear of missing out, right? They're nervous. They're like, if I don't have this, then I can't. I'll tell you, I just got a cell phone 3 years ago. I did not have a cell phone until 3 years ago. I'm also 75. I'm just kidding. Pam, I almost got her. So, no, I didn't have a cell phone. So I worked at a desk, right? I work at a desk, and if my wife needs to reach me or somebody needs to reach me, I'm right there. I'm right there on the phone. We had a phone, and my wife didn't get a smartphone until maybe 4 years ago. Before that. So people would always ask me, Sean, what's your number? I'm like, I don't have one. And they would laugh and they think I was joking. Well, and I joke a lot, you can tell, but I wasn't. It wasn't something we needed. We were trying to live within our means on one income and try to make things work. The first home we bought, we actually had it built, and it was a 3-bedroom, 2-bath house. At the time we moved in, we had 2 children. And yeah, we had 2 children when we moved in. And thankfully, we had 3 girls and 3 boys, so we had the girls' room and the boys' room and then our room. And would I have wanted a larger home? It was about a little under 1,700 square foot, no garage, so we had a lot of packed in there like sardines, bunk beds and everything. Would I have wanted a new home sooner? Yes. But we lived there for about 12 years, and while we were living there, it was an affordable home. We were able to, we had refinanced to a 15-year mortgage, so we paid very heavily on it, so we had a lot of equity when we moved. And so when I built my new house, I expanded a little bit, and most of them have their own room. But that's I think a very clear, want versus need. We want a big house. We may want one. Or some people might like the tiny living. I get that too. But they may want something, but do they need it? That's where we kind of talk about the differences. So an example too of a way that and I'm just giving you personal examples, and feel free to chime in if you have an example like this. But one thing I did when we had a car payment, when we were recently married, we got a minivan. Had the kids, so we got to get a minivan, right? I think it's mandatory to get a minivan when you have that many kids. But we had this van, and we paid it off. And so what I did was, at the time, the payment I think was around $300. And so what I did was I kept paying myself $300 a month, and I put it in the savings account. And we did that for a couple years. So then when I was able to go buy a new vehicle, we had this large down payment. I wanted to keep it even longer, but my wife said it was a need instead of a want, and so I got overruled. But so there's things like that you can do to be smart about your money. Because if I hadn't been saving all that money, then I would have had to finance it and pay interest, which we're going to talk about in a little bit. Does anybody have any examples of ways that they've decreased spending? I know we talked about some increasing. Yeah?
As a college student, I think it's inevitable that we go out to eat every now and then.
Yeah.
I realized before using every dollar that I used to spend probably $7 a meal when going to fast food, going to the wonderful Chick-fil-A.
Yes.
Because I would always get a meal. It's something habitual for me. So what I try to do that way, I can go out to eat more with friends, but not spend as much as just get the sandwich or remove the drink and remove the fries.
Yep.
And it's cut my cost in half just by doing that. So
there you go. I like that. That's a good example. If you all need to find me on a Saturday, I'm usually down at Chick-fil-A with the children. So So this is what we're talking about, right? Keep an eye on cash. Track your spending. So if you don't know, if you don't have any app where you look at what you've spent, or something that you're going back to analyze your spending habits over the month or week or day, you really don't kind of lose track of things, right? You just, what's my account balance? You're like, goodness. So people will come in to the credit union, and I'm sure they do this at other banks too, and they say, I don't have any money in my account. And we're like, okay, well, let's sit down and talk about it. And one of the things that they'll say, usually the account representative or the bank representative will say, well, they might ask questions like, how you track your spending? Well, I really don't. My card works when I swipe it, right? Some people come in and say that, and they get into trouble, of course. But one thing we ask regularly is, well, let me see your register. Let me see how you track it, and we'll kind of see if we're on the same page. Well, I don't do that. So, it's very important to do that so that you don't get yourself into a financial debt and struggle. And it's exactly right. So how much is like a new TV? How much is let's talk like a big TV, maybe not this big, but maybe like a 70-inch TV. How much do you think that runs? 600? Okay. I don't know. I haven't been pricing TVs lately. So we'll just say 600, right? So when you go and you say, okay, I'm going to get $600 cash out, and you say, you can see it as tangible. But if you use your debit card or credit card, just one swipe $600, one swipe $7 at Chick-fil-A. It's just one swipe. That's what my kids think. Just one swipe, Dad. So they think it's just endless. So, monitoring how you spend your money is key. So I would definitely recommend something that I have found beneficial over my tracking of personal finances is really dialing into tracking it. And you can Google and say, hey, what's a good app to track? And read some reviews on things. Ask your friends, ask your family, ask people about it. I think that's a good way to do that. So we kind of talked about accounts. So what happens if you have a debit card, or how's your debit card work? When you swipe it, where's the money come from? Checking account. Okay, perfect. That's exactly right. And most financial institutions don't charge anything for that. It's a service that they offer as a convenience. What happens if you swipe your card and you don't have enough money in your checking account? What's that?
Get declined.
Maybe. What at least at Pender, and again, most other financial institutions that I'm aware of, if you have money in your savings account, it'll just pull from that, and it usually doesn't charge you a fee for that. And there are some restrictions to that. It can only do it a certain number of times a month. There's regulations for that. The government's wanting to make sure that you're not using your savings account trying to remind you of things. So you swipe your card, it pulls from the savings. What happens if there's no money in your checking account? There's no money in your savings. It may get declined depending on how you've elected the account to get paid with your financial institution, but it may overdraft your account. Does anybody know what an overdraft is? How's that work?
Well, they charge you for that.
They charge you for it, yeah. I mean, how much do you think an overdraft fee is? Like how?
$30.
Yes, $30, right, plus or minus, yeah. So when you swipe your card for that $1 drink and you don't have it in your checking account and you don't have it in your savings account, it's going to cost you $31. So it's an expensive lesson and drink. It's an expensive drink for sure. So be mindful of that. That's something that if you're tracking your spending, you're gonna see those things. You're gonna see those things happen. And you can talk to your financial institution about that. Now, I will say, we live in a convenient world where, you can instantly just log in on the app and it just tells you what your balance is, right? So, if you are monitoring it, I think you shouldn't be into too much trouble. But it's folks who are just swiping without looking and tracking that can get into trouble. So mortgages, like I said, I do mortgages. So if you do a 30-year mortgage loan, how many years do you think you need to pay that mortgage to be halfway through? So like if you financed a $100,000 house, how many years, if you just make the minimum payment, would you need to pay on that to get to $50,000? Anybody have a guess?
25 years.
Right, yep. I ran an amortization schedule last night. It's about 20 years, yeah. So now the last 10 years, you're paying the $50,000 a lot quicker, because what happens with a mortgage loan and pretty much any loan, it's the interest is accrued based on that monthly balance. So at the beginning of the loan, you have a larger balance, you pay more interest. But certainly it will turn the tide eventually and go down. What about a 15-year? How long do you think you have to pay that for to get to the halfway point? Any guess? 15 years? 10? It's about 8, so it's a little bit quicker because for both of the homes I've built, I started with a 30-year mortgage. The first one, we were in a declining rate environment, so after about 6 years, I refinanced from 6% to 3.25% on a 15-year mortgage. So I saved a lot of money on interest, and we saved, if I had kept that mortgage the whole time, I'd have saved about $60,000 in interest over that term. And the same goes where I built the new house and I refinanced to a 15-year afterwards. We're probably, if we're comparing apples to apples, the 30-year versus the 15-year, I'm going to save about $100,000 in interest over the life of the loan. Now, that's not $100,000 that I'm seeing right now. So that's something to be in mind. Financially, I feel like I'm a pretty disciplined person, but I realize that, so I'm paying this extra mortgage, this higher mortgage payment for a 15-year loan, knowing that I'll have the mortgage paid off much sooner. And the payment that I'm making now, I won't have to make in those years. I'll have 15 years of no mortgage if you're comparing a 30 to a 15 year. So I'm a big proponent of 15-year mortgages, but when I talk to people, why do you think most people do a 30-year mortgage? Payments are lower. That's right. It's more affordable. And we had right now, if you look, see, I keep up with these articles and stuff. I read about different opinions, and there's a lot of opinions out there. You could talk to 10 people and get 9 different opinions about where we are with our current housing market. But there's ups and downs with the housing market. There's appreciation. There's decreases in value after 2008. I had to sit down with people and they say, well, Sean, I want to refinance this loan, but I think I'm upside down. And we look at it, yeah, you're about $100,000 upside down. And it's a horrific realization, but for many people that were in that, they bought at the high time, looking back, for many people who weathered that storm, if they waited 10 years later, we look back, they're back or at a higher value than what they were before. So long term, I personally think a housing or a house is a good long term investment. And if you can pay off the mortgage and not have a mortgage in your retirement years, that's a great thing to do. So what? This do not know. Established credit. Oh, we did not talk about that. Okay. So what do we know about credit? Y'all tell me what y'all know or what you want to know, and then we can talk about that. Does anybody know anything about credit? What is credit? I don't know.
It's borrowing somebody else's money to do what you want to do at the time.
Right. Right.
Your money.
Yeah.
You don't have.
Sure. Yeah, it's money you don't have that most people don't have, for example, $100,000 to buy a house. So, they've got to finance that. But, I'm always, people will come into me, they say, how much house can I afford, Sean? And I said, that's kind of a loaded question because I, on paper, can qualify people for a lot more home than they can afford. And I don't want to do that. I want to talk about it. And I don't want to sound like a used car salesman when I ask, well, how much do you want your payment to be? But some people will have different expectations. They may come to me and say, I want an $800 monthly payment, including my taxes and insurance, but and I want to finance $200,000. I'm like, well, that's just not going to happen. So realistically, we have to kind of set the expectation. But credit in itself is a history of so if you get a loan with Pender, if you get an auto loan with us, a credit card, a mortgage, we report to all of the 3 major credit bureaus. Does anybody know what the 3 credit bureau names are? I bet you can think of a couple of them.
TransUnion, Equifax, Experian.
Perfect. See, perfect. We're going to switch spots here. So what is the highest credit score you can have? Does anybody know that? That's a good question. 850. Some people will tell me, they say, I think my credit score is 900. And I'm like, is that all of them added together? No. I joke. I hope not. But, I've seen on paper, I've seen some credit scores right. I think the highest I've ever seen is probably in the 840s. The lowest I've seen some in the low 400s, like 419. And so what happens is when you, good and bad information, or good and bad pay history is reported to the credit bureau. So each month, you pay your car payment on time. We report to all 3 credit bureaus saying, Ms. Smith paid on time. And so that's good. And so we get a tick mark there. It updates the balance and so on. Well, if you make a late payment, and what I'm saying, it depends on the creditor, but most creditors will not report anything delinquent to the credit bureaus until you've reached 30 days past due. So after 15 days, 10 or 15 days, you may have a late period. There's typically a grace period. But then after that 30 days, there's a 30-day late hit on your credit. Well, having a late payment last month versus having a late payment 5 years ago, there's a difference. So it impacts your score having more negative history in the near term, like within the last year or two, versus something that's older. Eventually that will fall off. Typically the negative stuff will fall off your credit after 7 years. The bad, poor, missed payment history will fall off within 7 years. The good stuff that you want to be on there longer remains on there longer, usually 10 years. So even if you pay off your car loan today and everything was paid as agreed, that will still show on your credit report and affect your credit score for up to 10 years. It, again, doesn't have as much of an impact if it was 5 years ago paid off than something that's more current, if that makes sense. But depending on the loan, different loans have different minimum credit scores. Different lenders have different credit score requirements. So, but it's not just a matter of your scores here. It's a matter of looking at other factors with your credit. I get, what are some things that are, how does your credit calculate, or how is your credit score calculated? We kind of mentioned, I just threw out a bunch of stuff that is calculated, but is there anything else that's included in your credit score that you can think of? Yeah.
We talked about payment history.
Yep.
Types of new credit, that be one. The amount we owe.
Mm-hmm.
So if you have a lot of student loans, that's bad. And then there are 2 other factors.
Yeah.
Maybe 3, so I'm not.
I gotcha. Well, some people they'll tell me, say, well, my debt to income affects my credit. They think that their income somehow is in there, and that's inaccurate, because the credit bureaus don't have any information on your income. They sometimes have information about your employment and your address and things like that, but they don't know how much you make. That has nothing to do with the actual credit score calculation. One factor that a lot of people don't think of is how you utilize revolving credit. So credit cards. Well, I'm throwing out some terms here, and I understand this is kind of an introductory, so let's talk a little bit about some introductory terms. So an installment loan, what kind of loan is an installment loan? An installment loan, what is that? Yes, sir.
Is that like a car loan?
Yes, sir. Like a car loan, a personal loan. Even a mortgage is considered an installment loan because it has a fixed payment for a period of time, typically. And then a revolving account. What is a revolving account? Credit card, right? So it has an open limit, and you can use it, and your payment is based on the balance. You can pay it back down, and you can reuse it again. I had one of the first credit cards I opened up was a Discover card, and I still have it today. I've had it forever. That is another factor of your credit score, is how long you've had credit outstanding. So if you go and you say, Sean told me I should go open a bunch of credit cards, that wouldn't be a good thing, because you would show a lot of inquiries. You would have a lot of accumulation of debt, which could be a negative factor in your overall credit score. But if you get one factor that really has a major impact on your credit score is how you utilize that revolving credit. So if you have a $1,000 limit on your credit card and you put $900 on it, well, you're at 90%. You're almost maxed out. And because of that, that's a drag on your credit. But the good thing about credit is very fluid. So you could pay that balance down much further or pay it off completely, and the next month it would recalculate.
So I have a question on that.
Yeah.
The utilization of the credit card. I have a credit card I've been using, but I haven't been using it a lot recently. I know that everybody should stay under 30%
Yep.
for your credit score purposes, but I'm at 1%. So is there a minimum amount somebody should use to keep gaining a good credit score or a good credit?
I get that question a lot, and I think there's some mixed advice on that, because nobody, including myself, can tell you definitively, if you do this, your credit score will rise by that. I tell you how I use my credit score. I have a number of credit cards that I've just accumulated over the years, and I typically use my credit union card. I use it for everything that doesn't charge me an extra fee, for gas, groceries. I pay my AT&T bill with it, and so I pay it, and I don't wait till it cycles. So like if I spent $1,000 a month in my credit card, I don't wait till I get the bill and it says $1,000. I just pay it as I go, every week or every 2 weeks when I get paid. And so it may only say I have a $200 balance when I've really used $1,000. So I would say that just using it, and I wouldn't recommend, because some people have come to me and say, well, I was told that I had to use it and keep a balance and not pay it off each month. That's I think inaccurate, because what'll happen, even if you use your card for $40 a month for gas, you're going to get the bill that says $40. We report to the credit bureau $40, and when you pay it off, you don't pay any interest, and then the next month you use it again for $30-$40. It's going to show that on the credit each month. So using it, I personally recommend, if you can do it, and that's how I use my bill. I don't want to pay. I want to pay it off each month in full. Because what happens if you don't pay it off in full each month? You start to pay interest. That's right. So I use a credit card for a few reasons, but you have to be, again, disciplined with this, because I've had some friends that said, Sean told me that I should do this because he does it, and they ended up having a balance and had to pay it off, and they overextended themselves because they weren't tracking it right. But if you pay it off each month, you're going to get the benefit of, establishing credit. You also get the security. So if something happens with my credit card, if I pay something that gets compromised, well, that's my credit card, that there's a process to resolve that, rather than holding up some of my liquid funds in my checking account, right? So I don't want to fool with that. So security. And plus, my card that I use gets points, and I redeem it for... I usually just do like a cash gift card, but there's things you can do for that. I know Mr. Dave Ramsey is not a big proponent of the credit cards, but I think you can be disciplined with it and take advantage of it, is the way I look at it. But you have to be on the same page too. Like, I'm on the same page with my wife on spending. We're both pretty good. We're both. It would be a problem if I was a spender or she was a spender, and we would probably talk about it some more. But that's something good to have a conversation with about your significant other, right? That's a big cause of split ups and stuff, finances for sure. So what are some ways that people can establish or reestablish credit? A secured credit card. Perfect. See, there's right here, secured card. I even put the tips up there. She took it from me. She didn't even read the slide. So secured card. What is a secured card? Does anybody know what that is?
It's like a certain amount of limit that coincides with your bank account.
That's right. Exactly right. Yeah. So Pender, we can, and other financial institutions can do the same. They say, okay, we'll give you a $500 credit card limit, but we're going to put $500 on hold in your savings account, because if you don't pay it, we're going to take the $500 and pay it off for you. So, but it's a way to establish credit with really you don't have to necessarily have any income, really, because as long as you're able to pay it, you typically aren't going to get a loan that you can't repay anyways, but it will report to the credit bureaus. That's typically how a lot of people will start out their credit, with a secured loan. Or they may, if they buy an auto loan, they may have to pay a higher interest rate, because if you don't have any credit, it's kind of like not having, you don't have good or bad credit, you just have none. And it's a high risk, because lenders don't have anything to really gauge your ability to repay, risk factors to price the rate. So you typically are going to pay a higher rate. You may need a co-signer. You may need to put a large amount down if you're getting an auto loan. So definitely I would talk to your financial institution about what options they have for those type of loans. And these things work for whether you're establishing credit for the first time or you're reestablishing credit if you've had some financial issues in the past. What are some financial issues that arise in life that personally, or family or friends that have had? What are some things that might come up that may be a financial burden? Yeah.
Car breaks down?
Yeah, car breaks down. Sure. Yep. Could be very expensive. It could just be totaled, or What's that?
Doctor, health costs.
Oh yeah, health expense. You could be diagnosed with something that's very costly, and
You might have an accident and go to emergency room.
yeah, or might have an accident. You might be out of work for workman's comp, and you have problems with that, or you're out of work for 6 months and you can't pay your bills. What do you have to do to fall back on? That's why we talked a little bit about budgeting and saving. Yes, the ransom will get you every time for sure. But I mentioned some things. Yeah.
Any legal fees?
Legal fees? Yeah, sure. I've dealt with people having to do that, and I've pretty much heard it all, but anything that can come up with, could be a split, maybe a divorce, maybe a loss of employment, maybe they overextend themselves and they file bankruptcy to kind of reset things. I mean, bankruptcy is not necessarily the best option, but sometimes it's the only option for people. And so, but there is a way to start over. It's not like if you file bankruptcy or have some major financial issue, you'll never be able to get a loan again. It's just you'll have to go through a process to reestablish yourself with credit. Okay, so how can people track their credit? Does anybody know how do you know what your credit score is?
Credit Karma?
Just Credit Karma? Yeah, sure, that's a good one.
You have a free credit report?
Free credit report. If you go to annualcreditreport.com, you can get a copy of your credit report, all the data that's on there, all the payment history. It will solicit you to purchase the score. You don't have to get the free credit report, but it oftentimes solicits you to pay for some monitoring service to get it. But Credit Karma is I haven't done it personally, but it's a free service.
And if you have a credit card or you have a house and you have something that you actually have credit, a lot of times those financial people will
They do.
give you the FICO score. They'll actually give you the FICO score instead of just one of them.
That's right. They do. I am pulling up my.
With my credit card, the credit union I use is FICO, but only because I have a credit card.
Yeah.
I've heard that if you go online and check your credit score, that it'll go down. Is that true or is that just a myth?
So that's untrue. Like if you're doing like Credit Karma, or you're doing like I just pulled up the Discover and I said a free credit score, and it tells me what my score is, and it gives me like a monthly trend. This is more what I call an educational score. I tell people because they will call me and say, Sean, Credit Karma says I'm at a 720, and then when they actually apply and it pulls credit, they're at a 680 or lower. Could be less. And the reason for that is that there's over a dozen different credit scoring models. So if you come to get a mortgage, we're using a particular scoring model. If you go get an auto loan, they're using a different scoring model at the dealership. If you come into Pender, we may be using a different scoring model for an installment loan. Or if you go get a credit card. So there's all these varied calculations of it. What I find beneficial, I tell people, is that Credit Karma and all these other score trackers are beneficial where it allows you to track trends, ups and downs. Because I'll tell you, the Discover thing, I was looking, we had it, and I look at it every month. So credit score went down 80 points. I'm like, what? And it said I had late pays. It didn't tell me what it was. So I went to annualcreditreport.com, and I pulled my free credit reports, and there was a creditor that I have an open line of credit for, just a small line of credit. And it had reported 90 days late. I hadn't even used it in a long time. So I knew the person over there. I used to work there. And I sent him an email, and I said, hey, what's going on here? They said, oh, I'm so sorry. It was an error. We'll get it fixed. Sure enough, once it reported updated, went right back up. But had I not been tracking that, I wouldn't have known. And it could have been 6 months from now when I needed credit, and I went and did it, and then I would have been kind of stuck. So definitely I would recommend tracking your credit some way, and you can kind of use different resources that are out there. But those ones we mentioned, the Credit Karma, the different credit cards you have that allow you to look at it, is a good way to do it. What's the benefits to having excellent credit? Yeah,
like lower interest rates.
That's right. You save some money. That's for sure. Yep. What else?
You can take out a larger loan.
Yeah, you may qualify for a larger amount. Yep, that is definitely true. I always look at it, ease of credit, because if you have an excellent credit, it makes my life a heck of a lot easier when somebody comes in and they have an 800 credit score, and it's just, yeah, I can do it. But again, it's not just the score itself. There's many other factors or a few other factors that are used in looking at determining approval for any type of loan, for that matter. He's a
I
credit.
think part of it has to do with building that reputation in the financial institution.
I agree. As a credit union, I think that our membership base oftentimes will have credit unions in general. Does anybody know the difference between a credit union and a bank?
Yes.
Yes. She's got her hand up. She's whew.
So, a bank is for profit and a credit union is not for profit. Therefore, since a credit union is not for profit, any profits that they do make in the year, they try and give right back to the lenders, whether it's through their interest rates on savings accounts, savings accounts, or lower interest rates or lenders. So they can provide more options than what a bank intended to.
That's right. Just the way I would have said it. So I like that.
Could I find something a little bit? In a credit union, there are two halves, right? There's a nonprofit half, which you're talking about.
Mm-hmm.
There is a profit side as well, the side of self-insurance, investment advice. So there's actually two halves.
Mm-hmm.
Is that correct?
I would say that, certainly we make money, obviously, to, pay the bills and lights, but when we make money, unlike the bank, when the bank makes money, they have to pay it back to their stockholders, the people that bought stock. They pay it back to them, forms of dividends. When we make money, just like she mentioned, we pay it back to the member in the form of lower rates, and maybe we expand services, we offer different loan products. So there's ways that we're giving back. Now, as far as the investment side goes, you are right where they offer investment services separately from Pender as a different entity. But I guess I don't know how to answer that fully. Certainly they make money, but...
So would you recommend having a debit credit card with a bank or a credit union?
Well, if you're asking me because I work at a credit union, I love the credit union mentality. So a lot of times...
But for a college student?
Yeah, I think even for a college student, even if you... So there's people, Pender, we're here locally. We're here in... Our branch network is in Baldwin County, Escambia, and Santa Rosa County, Florida. But if I go up to Atlanta... We have a network of credit unions that there's actual credit unions up there that I can walk in just like I was going into Pender, and I can do my transactions. But I tell people that, the only reason I go to the credit union is because I work there. Otherwise, I wouldn't really go in there. I have direct deposit. I use my debit and credit card. I do online bill pay. There's very infrequent times I need to actually go physically into a location. We can do loans by phone, over the internet. So I would say I'm a big proponent of credit unions. I've worked for a couple different credit unions for over 10 years, and I've been a member of a credit union for over 20. So, go credit unions. And I worked at a bank for 10 months. I won't tell you which one. Yeah.
Between the banks and credit unions, banks usually have more fees on every product they have. So credit unions.
Yeah. And I worked at a bank for 10 months. Longest 10 months of my life, and but I never banked there, and it was hard. It was like selling ice to Eskimos. I really didn't like it. I didn't really believe in the products and services they offered, because I would say, "Hey, how does your credit card work?" And I'm like, "Ooh, that's not any good," because I knew how my credit card worked at the credit union, and I was like, "It really doesn't compare." And so the rates were just so much better at the credit union. And I feel like, whether it's Pender or any credit union, I feel like the mentality of people helping people is something that credit unions really, really believe in, and help. They want to help their members succeed. So somebody mentioned something about student loans, and this is a quick slide about differences of student loans. When I went to school, and another reason why I went locally, I wanted to have a college degree, but I didn't need to go to a large university that would have been 4 or 5 times the cost than UWF. And UWF is a pretty good sized university, but and we have excellent academics here. We're well ranked, and we have a great football team now, so it's exciting. But there's differences between the different types of student loans. I had both. So, the subsidized is paying some for a little bit, and then the unsubsidized, it's just starting to accumulate interest right away.
I have a
If you go to a bank or credit union to get a private student loan, is that a loan that you need to start paying back right away, or do they have some of the same benefits as you graduate 6 months down the road, then you start paying, or is that when you have to start paying right away?
It depends on if it's an actual private student loan or not. So
seriously.
Yes, yeah. When it's a student loan, every lender is going to handle that a little differently. Very true. So there we go. So when I went to school, I had gotten some student loans, and then I mentioned earlier I went on that 2-year church mission. It was a full-time mission. I wasn't getting paid to go. Actually, I had to pay to go. And so while I was gone, I wasn't in school anymore, so I had to apply for a deferment. And I was able to qualify for this deferment, and I didn't have this. Once I got back from my mission and I started working, a few months after that I started making repayments to it. So it's just important that you understand, once you're done with school, when am I going to have to start paying it back, and how much am I going to have to start paying back? Those are things that you may not think about it right now, but if you get a check for $5,000, one day I'm going to have to pay this money back, unless you win the lottery, and then you can pay it back with that. But if you're having financial difficulties, and I would add this with student loans or any other debt you have, if you're having financial issues, to reach out to your creditor and provider and see what they can do. Most creditors want you to be able to pay it back, and sometimes they understand there's bumps in the road. If you call us or call any creditor, I worked in collections for like 8 years, so it was a eye-opening experience, and a realization that many people, there's all kinds of struggles we all have. So I think going back to the point of budgeting, if we're preparing ourselves, saving first, paying yourself first to make a bill is something that I've done for years, and it's something that a lot of people don't think about doing. But make it a goal, whether it's starting out small, $20 here, $20 there, but save the money. You will make adjustments in your budget and your life to not go without. Trust me. So living within your means, we've shared a few examples. I know I've probably talked too much, and I'm sorry, but I've shared a couple of personal examples. Does anybody else have any other examples of how they've lived this living within your means mentality, and how you think that could be beneficial for you?
Trying to apply for scholarships, like Florida Break Future.
Yeah. No repayment there.
Yeah. And insurance so far.
I like it. Yeah. Well, and I did something that was, I told my kids, I told them a couple things, but one thing is when they turn 18, I'm going to get them luggage. I'm not going to kick them out right away, but I don't want them living with me for 40 years. So, but it kind of having kids is it's like a crime, right? It's like 20 to life, right? 20 to life. But I tell you, my mom taught me a lot of things about how to, she taught me some things what not to do, to be honest with you. Some things I saw the way that they managed finances, and I didn't like that. So I changed some of the things I did personally. So I think we can look at bad examples and do better. We can look at good examples and imitate that. But I just feel like if I could just go back in time, and I'm giving you the opportunity of experience that I've had, and just to share with you the importance of living within your means, understanding what the difference between a want and a need is. I think you guys will be much more happy financially. We did share these packets. It's like a 10-page front and back thing that goes over a lot of the stuff we covered here. And it gives you some resources, some online resources to go to and get some more information. Yes, sir?
Well, one of the things you talked about might be that once people understand that you have to pay back each loan,
yes,
it's now beginning at the student volume beginning to appreciate what that loan can do. They're beginning to reassess your career choices. cause there's dramatic differences between coming out with one degree versus another in terms of their potential earnings right out the gate. And so I've noticed a few students now have said, well, I want a little better than that income is going to give me.
Right.
I've got, I'm going to shift over to maybe a little better. So it's a lot of trouble. It's like in your case,
Yeah.
you wanted to have a large family. So that means you have to make some sacrifices. So life is sort of like that.
I agree, and I would just add a comment to that. It's not all about money, too. I think there's happiness in finding the satisfaction in what you do, and you know, if I wouldn't mind still living in the little smaller house I had, and we all piled up there, we could make that work. We just have to get the kids out of the house sooner. But you know, one thing I did when I went to school, I got some student loans, and I went to local universities, got the Florida Bright Futures, and then I even worked when I went to school. Worked full time. I went to school at night, so it took me a little bit longer to get the traditional 4-year bachelor's degree. So you know, there's things that you can do to make it work and achieve your goals and dreams. I think talking to people that have gone through that is beneficial.
Also, sort of add that you can live at home for as long as possible.
That's right. Unless you're my kid and you get the luggage.
One of the things that that I did when I was out of college, I had debt, and I also had a new family, so I chose to stay home. And so it was important for me to be frugal and look for opportunities, because I had a lot of wants. They weren't necessarily needs. So for me, I leveraged passions that I had to either look for ways to accomplish the want that I needed to have, right? So like so I couldn't afford to go to big name stores or things like that. So I would look for bargains when I was growing up, long before you all were born. It was really cool to go to thrift shops and get your clothes. It was like a thing.
It's coming back, Pam.
I know. And I donate a lot of really nice clothes to thrift stores now. So there's that. I leverage my love for creating and crafting to do and accomplish the things we had. So I couldn't buy the really nice furniture, but I could take something and I could make it look good for a lot less and not have that monthly payment. So those are some of the things, you know. Don't think you have to have the biggest, the baddest, the greatest thing right off the bat. Work towards it and leverage your passions to accomplish those kinds of things.
Totally agree. Appreciate that.
When you pay off your student loans, are you building credit, or does that not?
Yeah, it shows on your credits. I mean, most of the student loans I see are reported to all 3 major credit bureaus. Sometimes, though, until it's actually in repayment, so if like it's just in deferment, there's no payment showing, and let's say you have no other debts, then oftentimes there's a no score because there's no history of repayment, if that makes sense.
Okay.
Yeah.
And also, I've heard that it's smart to do microfinancing when you're younger. Is that something like in our 20s or just out of college we should start thinking about smaller investments and seeing if we can kind of cash in on that later on in life?
You know, I think I would just do research on that individually, because what works for you may not work for someone else. I think there's great investment opportunities in a number of different avenues. So different ways to save money or make money, because you can either save money or you can have your money work for you and actually make money and earn interest and things. So there's definitely different options with that. Yeah.
I have a quick question. So like, do you always need to spend money in order to earn more money later, like an investment, or can it also be like, for example, I take violin lessons, and it's just for fun because I'm not gonna be a part of the symphony or
Right.
program. So like that's kind of depleting my bank account a little bit, because I have like a small part-time job as well. But then like I'm wondering if that's worth it, because I'm not gonna get anything back from that investment.
Well, I think we've talked about some of these things about what makes you happy and feeling accomplished and learning new things. So certainly there's things in life that I do or other people do that maybe another person wouldn't do. But I do it or you do it because you find satisfaction in that. So I don't necessarily say everything you spend you should feel like you're getting some type of financial return on it, because it may not work out that way. But you may get some personal satisfaction or some other tangible benefit. Yeah. What's that?
Life is about balance.
Yeah. Yep. It's about balance. That's what Pam says. This is, like I said, that financial resource or that phone number you can call. And listen, we could be here for hours and hours and talk about all kinds of things. Was there another question over here, I thought? Did I ever see an arm? No. Do you have any additional questions on what we've kind of discussed today? I know we talked about a lot of topics. Yeah.
Did you mention that Pender actually has a budgeting app to use?
Inside our online banking. Most financial institutions, if you sign up for online banking, inside there they usually have some kind of money management program. So that usually provides some form of tracking, pie charts. You can set a bunch of stuff up. You can set up savings goals, long-term goals, short-term goals. So yeah.
So is that I'm a member of Pender? Is that in the Pender app that I already would have?
Yeah. If you sign up for online banking and you pay your bills inside there, it's a lot easier to see on the desktop than it is your phone. Okay. But that's where I would start and play, and then you can access a lot easier long-term on your phone.
Okay.
Yeah, gotcha. It's pretty easy to use. It's pretty sweet. Awesome.
Good. Brought the experts with me.
Thank you for being a member.
Yes. Any other questions? Okay. Well, thank you for your time.
Hey, Aaron and Sean for being here today. It was really good information and it was fun. And thank you all for being here. If anyone wants extra lunch, please feel free. And you can save money and you don't spend on another meal. And don't forget to check out our website to find out more about next upcoming events and our workshops and